Hello, everyone. Thank you for your fans listening to my. I'm Sam Wong, Fast LL from Fast LLC. I hope all of you have enjoyed watching the football game. For those who have watched it, it was pretty interesting. The game was kind of you really don't know who was winning until very end. So it was a couple of intersections that I think Cincinnati would be winning, but somehow it was actually they were losing possessions, and then when they trying to kind of attack, they lost the last opportunity. So just want to talk about the market. I mean, maybe the market with the same thing. You see that the 3 day streak, winning streak, and then Friday actually lost and wipe out all the games. So not until at the end you wouldn't necessarily know. Uh, you don't even know how the market really behave. All the bad news happened last Friday as market tried to retest high after 3 days winning streak. Coming Monday, which is tomorrow, you're gonna be hit with another bad indicators and also update on Ukraine. Although the good news is the futures right now is positive, but you never know. I mean that's very difficult to predict because in the Nikkei is actually down a lot. It was actually down 700 points, and Hang Seng Index also down about 300 points. So the Asian market was kind of taking a hit right now, probably because of Friday loss, but because the future was reflecting a positive indicating. So that's just something that I want to share with you. And then you can see what is always good to look at the index and how you behave. So if you look at the next, here's the Dow Jones Industrial Average. Friday, you can clearly see that this is starting at the tipping point, and then you actually will see the 3 day. Of course, it's always have up and down intradays. But then you have see the 3 day actually trending upward, right? Here, if I draw a line there, except here you start to be really start to get turn things around, and obviously Friday at the morning actually after the flip on the late trading sections on Thursday, you was come back up, but then with a couple of bad news, it's actually driving the market down on the Dow Jones Industrial Average. And then you can look at the other one, which is the Nasdaq. It was actually behaving similarly, and I mean you can see a definitely very steep V shape here on the Thursday sections, and then Friday, you see you keep hitting a beam pressure because of the CPI reporting, which is higher than expected compared to the forecast, and also the yield curve had actually hit 2%, a little higher than 2%, which is kind of comparing the last few months, it was actually at the peak. And then S&P, and then you can look at S&P 500 was a similar trend, and I mean you really look at it up to Wednesday, really really at the peak point, where you was, with a 3 day winning streak, it was actually pushing the market up very well, and then Thursday we start slipping at S&P 500. Just want to give you these trends so you kind of get a really good idea, include what's going on, and then we actually will talk about a few stocks as well. But before I get into that, I'd like to give you a very quick recap on what happened in the last Friday's trading sections. So on Monday, last Monday, China CSI 300 index rose 1.54% after reporting after a break for the Lunar New Year holiday, just like I predicted, before the holiday and after the holiday. Almost the shape light of hope, so the market was driving higher. US stock slipped Monday after major index posted solid gain in the previous week, with investors looking toward the key inflation data due Thursday. Tesla said that 128 million in gains stemmed from selling a portion of its holding in March 2021. The company made an initial 1.5 billion investment in the digital asset in January 2021. those holdings were worth about $500 million more by the end of 2021, as Tesla said that the fair market value was $1.99 billion. So even though there was a loss taken, from the Bitcoin that they have to mark it down, but actually they also have traded and selling it before in 2021. They kind of offset their losses. Just want to give you the highlight. And Baker Hughes, Schlumberger, and Valero Energy were also the biggest seller gain on Monday. A proposed $2.9 billion merger of equals between Spirit Airlines and Frontier was announced, which, if completed, will make the fifth largest airline in the U.S. with a total market share of about 5%. Pelican soared after CEO John Farley announced he was stepping down. The company said it would cut 2,800 U.S. jobs advance on Wednesday. Chipotle, symbol CMG, reported better than expected result after the burrito chain moved to hike menu prices offset the impact of inflation, sending its share more than 10% higher. Lyft, which is symbol LYF, rose more nearly 7% after reporting a beat on the top and bottom line. Robot, symbol RBLX, jumped 9% after teaming up with the National Football League to launch NFL Tycoon to engage football fans in the metaverse. Nvidia, symbol NVIDIA, also recorded a 5% gain, and analysts downplayed the $25 billion hit to the company after its deal to acquire UK chipmaker ARM fell through. U.S. consumer price jumped in January by more than expected, causing the market fail to test the new high after 3 days gaining streak. So that was CPI announced the market started, really taking a hit and slipping down. The consumer price index jumped 7.5% from a year earlier, following a 7% annual gain in December. Walt Disney, meanwhile, was more than up 3% after reporting better than expected quarterly result. EXP stock rose out solidly overnight in strong earnings. U.S. equity have a volatile trading week as investor balance among corporate earnings with varying expectation of Federal Reserve tightening monetary policy. Due to the possible Cold War, New York WTI set up $3.22 or 3.6% higher at $93.10 a barrel, and Brent ended at $94.44 per barrel. So oil price still keep going up because of possible war. If that happened to Ukraine and materialized, JP Morgan again will project it will be $120 a barrel, and some people project $150 per barrel. So again, for those who follow my video, you know that I said that's a bad thing actually. So far, of the 347 companies in the S&P 500 that have reported so far, 81% beat profit estimate, with overall earnings beaten by a median of 6%. Data from First Strength Global show. On the top line, 75% top estimate, with overall revenue beaten by a median of 5%. Investor and prepare for policy update by building around the financials, energy and quality part for technology sector, as well as margin resilience sector according to BlackRock iShares strategies. So again, there are a few sectors to be considered if you want to, consider buying into this market. And probably it's not talking about short term, but the long term perspective. And then also, the reporting earnings really does its own thing, and it is actually driving market up. But also the one who actually failed to reporting and meet expectation, individual stock, that they did get hammered about 30%. Even for the big one, right? Let's say Facebook. Metaverse, Netflix, right? They missed their target and actually hit very well. Microsoft, even though they were hitting the target and the earnings solid, but they acquiring the ATVI, the gaming company, and actually didn't well receive, so the market also got penalized and took a hit. So that told you, which is from $330 down to $300. So I'm just giving you some great example of big stock that actually take a hit, and if you believe them, they're very resilient and continue to be having the growth PAC ratio, which is what we're comparing, or even PE ratio in that instance, then you could be a really good move to if assuming the coming week also will have an intraday dip as well. It will be good to buy in for long range of investment. Because for the individual stock, obviously, if you have paid attention to the market, some of them when they haven't announced earnings, but because of the market dip, like the Friday that actually whip up all the 3 days gain, if you will have look at the index, then you really realize that some of these stock like HYLN, like Robots, Fastly, FAST, CI, and many others. I mean, Peloton, Zoom, they actually took a really big hit, and they actually dropped from a percentage wise one day down 40% to 75% of value. Which I told you, if the stock wasn't going to go bankruptcy and you would have gone to 75%, 80% of the value from the 52 days peak, well, would you consider buying them? Well, yes, the answer from my opinion is yes, if you believe that. And if the war doesn't cause World War III, which kind of wipe out everything. I mean, like I said, if that happened, you don't care about your job properly. You don't care about your money and what. I mean, you probably would sleep the money and take it to walk and find a place that is safest, right? So life and bread, which is you can have food so you survive, are the two most important thing in come to your mind, but nothing else. So then, if that perspective, you can rationalize the stock market. I mean, it is going to be wiped out everything. So that's is one other thing just to bear that in mind. But after that, you actually will be rebuild the nation and countries, whatnot. And you can see World War I, World War II. I mean, the economy actually will become very strong in the next few years. But I'm not suggesting to have a war again. I'm a peacemaker, and I don't really want that to trouble in people's life. So the other thing is, I want to give you a quick update on coronavirus. Coronavirus case worldwide reached 410.67 million. COVID-19 death topped 5.832 million. Coronavirus case in the U.S. have hit 79.29 million, which death over 942,000. COVID cases have fallen dramatically in U.S. with death over also retreating, but still about 200,000 to 400,000 a day from peak of 1.15 million a day. So even though you may hear that people keep saying that, but you just get bear that in mind, this is still a very high number compared to the rest of the world. When in Hong Kong right now, they are really going to very tight in security and want to do vaccine mandates. Having said that, I also want to move forward to give you some stock that we look at and talk about before, okay? So, for example, where is this one? This one, I don't know if you can recognize it, but this is actual Walt Disney. So Walt Disney, I have, for those of you follow my video, know I have recommended this stock 6 months ago, but unfortunately, it didn't really actually get hit higher than 6 months ago. And you look at the 5-day trend, they were up 4.2%, which is not too bad. And the revenue actually rose from 34% to 21.8 billion in the first quarter, which was better than analyst expectation, 20.9 billion. There was growth in both business areas, with the most dramatic increase coming from Disney parks. Of course, the reopening of park, which benefit from it, which technically was interesting enough that they claim most of the gain of this Disney theme park revenue recovered is from Hong Kong. So for those of you who don't know that, I just want to share that. And then Group operating profit more than doubled to 3.2 billion, which was about much better than expected. And product saw revenue climb from 3.6 billion to 7.3 billion as travel, train, park football, and cruise ship sales improve. Okay, so again, however, this is also saying that continue to limit capacity for safety reason. The division saw operating profit swing from 19 million loss to profit 2.5 billion. So if it is going to be, and also they have increased subscribers as well, just while Netflix was kind of concerned of increasing their subscribers. So this did a pretty good job. Again, there's some movies that are going to come up, or in December actually were well received, and I'm pretty sure next film in the summer there also is some of the new movies that are going to be benefiting Walt Disney. And then also once the movie come out, there's always all these toys and character, right? So those are also the sales. To me, that's where they really make heck a lot of money. So I'm still thinking this stock is a good to buy, but but Walt Disney have a really long history. Just bear in mind that the stock at one point as low as $40, which when the company were in trouble, well, then they have a restructuring and make some changes, and and then they have created a new movie which is exceptionally popular that kind of really saved the company. So. Always these type of company, when you think about it, when things were not doing so well, always just one great movie to save them. So I see a potential of Disney, going to do well in the long run, even though the market may be depressed and going down further for this one, but I think with the whole probably $125. I don't see it lower than that. But again, they were $40, and during pandemic they were $110 staying out there. But the valuation probably is low. They really is a discount, trade at discount. And now at the price probably I would say it's still lower than what it should be. With especially if you talk about the potential growth that's out there when the Omicron or pandemic is over. I mean, they definitely have a good potentials there. Okay, the other one I want to talk about, which I have actually supporting it pretty well. I mean, this stock is Robust. So Robust will be reporting the revenue earning. Just to let you know, on the February 15th, and they are actually the last quarter, for those who recording it, the IPO price was at $70. So right now you look at it, it's really trading below the IPO price. The 52-week high is 141.60. So this is another good example. This stock actually 2 weeks ago when you were depressing to really at the low $53 range. So it was actually picking up 60% of value, and then you rebounding it. And of course, with the news I just talked about launching with the NFL cooperations, you actually do help them quite a bit and bounce back 9%. But unfortunately, Friday, I mean, pretty much everything is down, so it's going to drag them down a little bit. So Robust last quarter, just to give you some idea, they earned just 5 cents per share on revenue of $509.3 million. Sales jumped 102% year over year to the third quarter. They have some key metrics that they're saying they have active users were raised 35% up year over year. And estimated booking for an earning, which is probably look forward or doing well for this quarter as well. So I'm really thinking and hoping. Of course, I don't have inside information. Again, when Tuesday announcement come out, it will beat the expectations. They wouldn't make heck a lot of money. But one trouble thing I have though is, people may buy Apple card like gift card instead of Robust gift card, even they'll be using Robust. So those revenue properly. I mean, Robust hasn't been recognized yet at the time, when those people purchase it in the December holiday gift, Christmas. So I just want to bring that up, meaning that even if this quarter wasn't doing as well, the next quarter, probably some of these will be recognized at that time for people who bought the Apple gift card, but actually using Robust. And I still see again the users were really, really amazing. How many hours? I think it's 15 billion hours that have been used for time. So so I just want to mention that I think this stock will be potentially good to hold on. Again, it is a discount right now at 141.60. Even at one point they were dipping a month ago or so when the market was in trouble and they were going down. They actually rebound back to $90 from a $70, just to give you perspective on that. The next one I want to talk about is CCL. So this one is the cruise stock. So the cruise stock have been, again, just want to show you 5-year trend rather than a short-term ranges. But before, pandemic actually come in late December and 2019, if you remember. So before pre-pandemic, CCL actually trading at the price of $54. I mean, and even if it's worst case scenario, which is that before the pandemic started, in March, when the market can really start crashing, at this point here is really the time when the market crashed. The Dow Jones Industrial Nasdaq all plummeted very, very, very seriously before the market, before the government started to talk about stimulus. They are still at this point here, which is about $45. And yet, right now it's trading $22. So, I mean, this is clearly seeing a discount at this moment. And I can't promise you how long, but I have a faith that, once pandemic is over, everything reopening in summertime, people go cruise vacation again, they're going to increase their price again, because right now they offer a lot of discount, so to speak, to attract more people going to cruise. Cruise has a lot of sunk costs, right? I mean, if you're, people, you have the date and you have the time, you're still going to go. So they try to get more users, to kind of help the fixed cost perspective. So this one in the long run, I am confident that they come back. In fact, if you look at the 5 day, which I click the 5 days there, it will actually back to 23 something from previous week. The worst case scenario when talking about Ukraine, all the negative news came up, they were at 1685 or 1690, 17. So it's for $17 if you would have bought at this point to this point, even though after the 3 day straight and then sunk again, which is actually the week was kind of down for CCL, it's still 22. That's $5. $5 gain. That's a lot, right? But again, I'm promoting this one for more long-term holding when the economy will be recovered, maybe hold for a year. The market, this one may go to $30. That means 50% return, right? Close to 50% return for 1 year holding. Just bear it in mind. And the same thing with United Airlines. Actually, you will have reached up to $51 before the problem of the market on Friday. They'll start to sunking. Thursday, Friday start sunking. So they actually, again, just want to point out the prices. If pre-pandemic, it was at $92. That's just the highest point. And you can see the previous year, we even picked a really, really low end point. The worst time of United Airlines about, mid 2017. I mean, it's still the value, the stock price will be at $60. So from $47 today to $60 is still a 15% gain, which is not bad. For very solidly, if you think about it that way, once the market, the economy reopening, which actually with the protests going on, around the world, and that, I mean, people actually, really push it to get there, and I'm so sure, hopefully, China eventually will get to that point, zero tolerance, and things look back to normal. Hopefully, then then we'll be in good shape. So one other one want to talk about this is Facebook. So Facebook is facing a little more challenging, but again, that was one of the things I show you around in a month. They actually had 34% decrease from the high peak point. So you could be thinking about a good buy, because I look back in the 5 year time range, or actually 2 years, it won't be 5 year time range. The stock had hit down to $178 range. So yeah, I mean, if you think about it, you might have another 20% downside, but you also have momentumly can put it back to $300 level. So this one, if you buy it, you may have to take longer to get there, but I'm kind of comfortable and confident that I hold some of this, and Myrtle Woods. I mean, if you believe in Zuckerberg, which turned Facebook around and make so much profit from, when they go to IPO, you can say the high end day, the first day, $42 to become $400 stock, right? Which is, 10 years, give it 10 times, which means you double every single year. You could have potential saying, hey, I'm going to hold and buy now, or wait for a year. You go back up to $400, then you almost give you 100% return again, right? For 1 year. So this one, again, I will recommend it not to panic, but just to hold it long and wait. That would be a good one to do. This one is, I don't know if you recognize this one. If I give you some clue, which is 1 year high was $700. So again, it's now at $400. So if you do the math, this is like $350 some dollars was at the time of after the announced earning of potential subscribers, potentially not going to be at a peak and not going to be increased as fast as they would like. So this is Netflix. So technically from high point for the date they made the announcement is 50% discount. So then you rebound. So now, I mean, they were actually crossing the point as good as $420 after very quickly within a week of other announced earnings and rebounded for $420, but now it's sitting on $390. So this stock, I would say, I don't know. I mean, $350 probably a good number to buy. I mean, PE ratio 37 wasn't really way outrageous. So the lower the prices and then they continue reported earning, the PE ratio looks better. The lower the PE ratio, the more attractive the stock to buy. And 37, I wouldn't consider a very high PE ratio. So this is another one that potentially could be, considered. So I have walked you through some of the stuff. Just want to give you an example of some of the stuff that I've recommended in the past and how they were looking and standing at this point. And really, I hate to say that, if the market continues to shake, and right now volatility will be the key theme for the next couple of weeks or maybe even a month, then you just have to hold on to ride and wait. And if and S&P and Nasdaq more decisively about their February 2nd high. Investors largely put new puts buy on hold right now. So again, the focus now should be on reducing exposure, especially for losing stock. That's recommendation. Still, as the past two sections show, the market environment could change quickly. So if the markets rebound in the coming week, perhaps the yield bond yield or Ukraine tensions yields, then investors will need to be adapted to that. Being flexible is especially important in the current situation. Volatility is the word, and then again, if there war, then the stock market definitely going to be, you won't even think about it. You would think about something more important than that, probably at that time. And some people think it's a good time to buy gold too. So in the upcoming day, geopolitical, energy, and supply chain concern may drive the market lower. But Super Bowl, the advertisement sales and whatever may neutralize some of the negative news, and then company continue to report corporate earnings, and hopefully we can hear more, resilience and sustainable growth of that to use some of the investor concerns. So for those who have been listening to my video, I suggest cruise, airline, Disney, which are these are the stock. I just showed you about the trend, the price trend. So I still think they were at the bottom, and they will be probably a good investment for them, once they walk off the pandemic. And bowling should have passed the worst part as well, even though I didn't show the chart, but I've talked about it in the past, because they have a huge write-off on the Jet 737 plane problem, and then they have more company interest to buy the plane, so then you will be probably, you will be put it back up again, pre-pandemic, for $450 per share for bowling. And of course, they're as low as $90 too, just remember that. BYD company, Tesla, Xpeng, HYLN probably would be good to buy at a dip and wait on 2024 green energy boost. So, if you buy those and as long as they don't go bankruptcy, you probably can hold on to it. But again, that means I'm talking about 2 years of holding, right? So you have to look at your preference where you really want to hold this stuff for that long. And for high-tech, cloud is the future and has sustainable growth. So Apple, Dow Dance, which is DYT, are my bets, and also like robots, which is what you for Netflix. I'm betting robots. Hopefully, February 15th is the day of announcement. It will go well, and HYLN, the announcement will be February 24th. So I hope abnormally in the past, I always see momentum before the earnings announcement for the HYLN. So you may take advantage of that, but then you have to be careful about they may have a disappointed earning, then it will drive back down. So you may want to sell before that. And then Facebook, again, Metaverse, if you believe Mark Zuckerberg, then, you can buy now and wait for a year. I mean, to me, if it's going to go back up to $400, in the beginning of next year, then there's really no point to trying to buy and sell and take advantage like this short term and, and bet and think you will get more than 100% return. Just remember that stock may run lower, but don't get panicked. He should show you that it's always rebound after the correction. And also, just remember as well is I normally don't endorse day trade. I'm not endorsing put options. But right now, with the volatility going on, it will be a good opportunity to think about to take advantage of that. But you have to have a big stomach for that, and you have to have a stop loss. So a lot of time what it is for day traders, you will buy something and you say, I'll take a loss if you hit 15%, or if you can more tolerant, maybe 20%, you'll cut the loss for that. Even if you rebound, you don't look back. You just say, this is my strategy, right? I take the loss if it's going down 20%. But profit-wise, if you go up, you also probably the same. You will sell if you hit 15% or 20%, right? But I don't think that daily you will hit that much unless you do options. If you buy physical stock, probably 2 or 3%. you will walk. I mean, from that perspective, if depending on what kind of stock you buy, right? I mean, if robots have come up with a big, good and unexpected earning, you could go up 20% in the same day. So it could have happened on stock like that. But if you talk about Apple, Facebook, Google, Amazon, I don't think it will go up 15% in one day, but maybe 3%, or even really, really good day, they will do 5%. Like Tesla could be gone 7%, in a really good day, then you can take advantage of that. But again, you have to remember there's some risk associated with that, and then you have to be very disciplined. And if you, at this point, honestly, if you lost 50%, I would just say, you know what, you may want to buy something at deep, buy more to dilute it. But if you're less than 20%, you may consider selling to take the loss and keep the cash and buy back the dip for some more solid stock, because that means you have to admit you make a bad decision, sometimes investment decision, and you move on. So you sell and you move it. I hope my this time I make it a lot more clear, just trying to help the people who are going to invest in the market and give you a more clear directions. But right now, futures again is still positive, so hopefully it will be staying that way. And tomorrow morning, what I find a lot of time is in the morning is up, and then in the afternoon it flip, because possible people were kind of taking profit taking. So just better in mind as well. Have a nice and wonderful week, and hope the market will continue to stay strong. And world peace.